This is Jordan with Conquer Trading and Investing. Today we're going to be talking about Bitcoin. We're going to be talking about signs Bitcoin is topping as related to 4-year cycle. We're going to make sure that you're ready, you're prepared, regardless of what happens. You know where you're managing risk around. So we're going to look at some pretty important things. We're going to look at 4-year cycle nature, where previous cycles have topped, what that means for us right now. We'll look at other things like the pi cycle indicator, and we'll look at where that has topped in the past and where that is projected to top as of today. We'll also look at one thing that I think is pretty neat, pretty interesting, finding the matrix a little bit. And Ben Cowan has taken a look at what he has said in the past. This is what has signaled a top. We'll look at all those different things. We'll make sure that we continue to continue to lay out our view, and then we're going to adapt in between. We want to make sure that everybody is ready regardless of what happens. There's a lot of issues going on with TradingView in the last 24 hours. Now, for me, yesterday, that for sure I was aware of the issues, and what I had to redo is re-add strategies. And overnight, though, a lot of that resolved itself. So simply go into indicators, go into invite only, and just re-add the script that you're having issues with, and that should go ahead and fix it. Before you do that, you could just click refresh, though. That might do it as well. So as we're going to get into today's session right now, let's just first go over our positionings. And we're looking at here some extended gains beginning to build over here. Ethereum holding an open position 31% into profit. Some people are wondering when about it's a good time to take profit on Ethereum. Now, from my perspective, well, let's go back to 2021 when Bitcoin topped in like its first little wave. You saw Ethereum peak out just a few weeks later. And in the past, that was a strong signal. Bitcoin would peak first, and then you would see Ethereum and various alts peak thereafter. The issue with that, or the problem with that going forward, was that in November 2021, they all peaked at the same time. That was new, that was different, and we have to be very aware of when new and different things are happening. And so you can't rely on, oh, Bitcoin is going to go ahead and peak first, and then after that will be, you know what? So that's just a difference. And a lot of people right now are wondering, after seeing the massive run up off the low, is it time to go ahead and unload some Ethereum? And sure enough, if you're following 4-year cycle behavior, and we're going to make sure that you are really in line and in tuned with what is developing right now. By the end of this session, you might be getting ready to pull that trigger. Now, I see it a little bit different, and I see that obviously Tom Lee is going ahead and he's beginning a Ethereum treasury company, and I think that's significant. Fundstrat has a reputation enough that the likes of Peter Thiel has decided to invest 9.1% into that new company, Bitmine. Now, what's interesting, ticker, by the way, is BMNR. And what's interesting about Peter is Peter has a phenomenal track record. He is one of the co-founders of PayPal. From that, he was the first institutional investor into the Facebook. And he also obviously is the founder of Palantir. So he's got a very strong track record across the board. And now he's getting interested in Tom Lee's new venture, what is going to become an Ethereum treasury company. And they plan on stacking and holding, and that could have on this, relative to Bitcoin, this much smaller market cap, some pretty strong effects. And I'm looking at, obviously, the major impulse up. And this whole bear market has been a very tight consolidation, right? We do have Bitcoin running way ahead, Bitcoin trading well into all-time highs, and Ethereum has not yet been able to take out its 2021 peak, right? I'm just going to go back up and come over here and just go to September 2019. September 2019. This is against Bitcoin soon after, where Ethereum was able to bottom out and then extend against Bitcoin going forward into the end of the cycle. What's interesting about that is Ethereum has its low over here and then makes a lower high, because we have the low over here in June of 2022 and has since made a lower high. So there's some symmetry over there. And I don't think that we're even close to being out of the woods in any sense. Remember, the macro can change rapidly. We continue to watch for signs of any of the hard data continuing to weaken, but we're actually seeing it, strengthen even a little bit. And you could look at today's data as just to reinforce what's happening over here. And we saw that, I don't even know where I am. We have core retail sales coming in better than expected, unemployment claims coming in better than expected. And obviously this week we saw a bunch of inflation data also coming in better than expected. And we continue to monitor and watch just to see if we have any breakdown of the hard data, because that would signal that as the Fed does begin cutting, and by the way, we're going to take a look at the 2-year later today after we cover Bitcoin, the main focus of today's session, and the 4-year cycle. And are you ready? Are we getting ready to top out, or is it different this time? No, XRP is a peculiar beast in so much as that it has this habit of like ripping upwards, and after it rips upwards, the company Ripple distributes into it. So it's almost inorganic. And yeah, that's just not, we go for what we believe to be the preferred assets that are going to continue to outperform the devaluation, and those with a lot of volume, so that we could all go ahead and participate together. And obviously we've honed in on Bitcoin, Ethereum, Cardano, and Solana. It's a powerful bunch. And then on stocks, it's absolutely incredible that we were obviously TQQQ is just a 3 times levered of the Nasdaq. And what's awesome about that is obviously tech and tech heavy Nasdaq, and then you have FNGU, which is the FANG triple levered, and then we have Tesla and Nvidia. We really honed in early on what are the highest probability assets to continue to roar. And if not, if Tesla or Nvidia at any point in time were to break down, like knowing when to be in the market and when out is absolutely priceless. And we've added now those Bitcoin plays into equities, obviously through MicroStrategy and the spot ETFs, and it's a fantastic mix. There's no need for XRP. XRP would add no value to that portfolio. And what we're trying to do here is we're aiming for what is, Warren Buffett's, his career, he's averaged like 34% annual compounded gain. Absolutely extraordinary. Best of the best, right? You've seen others like Stanley Druckenmiller be able to do for 20 years, 30%. Absolute legend. Ed Seykota is one of the best of the best over here. And he was able to do close to 70% a year, maybe even a little higher, 74% a year. Notice that most of the time that's not up and to the right. Notice most of the time his P&L is running sideways in drawdown, consolidating before the next move up. Over a 10-year period, you could say that the majority of that time was actually spent running sideways, not going up. That's what we aim for. That's our goal. And we look to outperform actually the goal. And if you go through and you go through the templates and you look at like even our worst performer is TQQQ. And if you look at TQQQ since 2020, I mean, it's more than getting it done, right? And then you have Nvidia is actually an outperformer. You see the spot ETFs. This is on GBTC. So this should be on IBIT. I was actually showing a friend yesterday how this was modeled on GBTC, and now we're over on trading it, or I am on IBIT. Go ahead and just pull that up. And then you have FNGU, we just had a ticker change. So it's our best performer outside of MicroStrategy, and MicroStrategy obviously doing fantastic things, and continues. I know that's going all the way back to 2020 or 2021 when it's done some extraordinary things. But look at the last 2 years. And it continues here to have, well, let's even just look since 2024 then, because the gains are absolutely so ridiculous. And, for 2 years, 70% is our goal. That's getting it done across the allocation of everything. That's what the goal is, bringing that diversification, because you never know at which point one is going to be running hot versus the other. Regardless of what you think, you don't know. Bringing it back over here, and I want to get into Bitcoin and the 4-year cycle. We're looking at first, I just want to continue here with Ethereum. And Ethereum, if it's able to go ahead, and we have some pretty strong convergence of resistance. I'm watching this structural line, the resistance over here. Again, it was tagged over here as resistance. Here you could see support resistance. That line is in play, but coming into that high around 4,800, you could see that the convergence of resistance, right? Once prices eventually, and assuming prices eventually, and you never know at this point in time, if I would say where's my greatest risk, and I would do it on a chart with a Wix, I would be watching for that line. If at any point that broke down, that would be, for me, bad news bears. That would say something is really wrong. Now, and assuming here that you break out, like, not something's wrong, something's really good. And especially when you have that type of coil, that type of consolidation, an upside breakout, our expectations, my expectations, right? We got some strong resistance into this area over here. And yeah, I believe that Ethereum has a really strong chance as we see these new changing dynamics. The new dynamics is obviously, well, you have some serious players who are saying, all right, let's go ahead and accumulate Ethereum, and let's accumulate it to hold it. That changes here, supply demand dynamics. Nope. That's what we trade. What we trade is what we trade, and we have dialed into what we believe to be the best of we look for consistency, and here we are. So let's move over, and that's right. XRP is absolutely would be better off as a mean reversion asset. Very correct over there. Let's go over, take a look at what's going on with Bitcoin, and we can see Bitcoin here trading right now, right? Where are we at on real time? This is BLX, so it's delayed over here. And right here today, we're looking at Bitcoin $118,464,000. It's absolutely beautiful. Absolutely beautiful. And right now, you can see that measuring these cycles from the high, I like lining them from the high. I love how they all bottomed out in the bear market at the same time. And I noticed that this particular cycle in white had reduced downside volatility. That was, by the way, the first sign that something like 4-year cycle dynamics were changing. Previous 2 cycles, 85, 84% drawdown. This one, even with the whole FTX fiasco, had that reduced downside volatility. That was significant, but 4-year cycle behavior, they all did bottom around the same time. And then we've continued to come up. And then another thing, the second clue that 4-year cycle dynamics potentially are changing is that we saw an all-time high before the halving instead of roughly 6 months after the halving, caused by the reduction of the miner's reward. 2 major things: reduced downside volatility during the bear market, and then a new all-time high ahead of the halving. 2 significant things. Now, if you were to continue from measuring 4-year cycles from the high and into their peak, we're looking at, pushing it all the way out because pushing it all the way out to October, we have what could be, or what in the past has been a peak, or even further to that into early December. And we've talked about why we believe, look at this over here, why we believe that, by January, if price continues and anytime after that makes a new all-time high, well, there's no more, like, the discussion is dead. The 4-year cycle is actually dead. However, we're not there yet. We're actually in a period where a lot of people are really expecting Bitcoin to peak, and they're looking for that 4-year cycle behavior to be very, very similar once again. And the truth is that maybe that happens again. Maybe we see a lot more of the same, and including drastically diminishing returns. I mean, we did see it last cycle. Maybe we're going to see it this cycle again. You want to be aware. And from where we are right now, and roughly day 450, you could see into day 550, which is 100 days from now. That has been the longest running cycle. Where does that put us? 100 days from now puts us into, it escapes me now. If someone has the date, I did it earlier, and for whatever reason, I can't do the math right now while we're on the live. I'm just even looking for what today's date is. So we're into July. So let's say end of July, all of August, September, October. By the end of October is exactly when 100 days from now, and that would be so far, if Bitcoin cycle has not yet peaked, the longest running cycle before then. And that puts us into what is a very, very historically favorable portion of the year, seasonality wise. And, so I expect that, this time will be a little loose. Instead of just saying that into the end of October, for sure into November or December, we could run longer this cycle. I don't think that there would be anything weird or like different about that. I think that would be a lot of 4-year cycle behavior if that were happening. But beyond that, that would be new and different. And at that point in time, that would be. So is that your window between October and December looking for that peak? And maybe even a little early into September. So by the way, before we start getting right now into what, for sure. So like, so hold on one second. This is probably one of the most important questions so far of today's session, and just let me go ahead and just come over to here to explain that a little bit. And yes, starting in January 2022, if you go to the YouTube channel, is when I talked about this chart here and what was taking place, and that Bitcoin had the potential to be leaving the facing reality phase. Now, it needed to jump the chasm, they call it in adoption. It needed to be able to get out of the facing reality into the ultimate market opportunity. Obviously, you saw during this particular period of the chasm being jumped, you saw two major catalysts. You saw Wall Street enter the market through the spot ETFs, and you also saw the current US administration embracing Bitcoin. So two major events that have helped Bitcoin at this stage of adoption jump the chasm into where it is today, into the ultimate market opportunity. And like, does that mean the 4-year cycle is dead? No. You never know. When you always in the markets need to know where you're wrong, right? There's one thing to enter into an investment. There's another to know when you're wrong. Like, that's just what investing is. It is managing risk. So why I am saying that many things here to me are pointing to a transformation of Bitcoin's adoption. And we view that through many different lenses, including the downside reduced volatility, including the new all-time high prior to the halving instead of after the halving, as in every other cycle beforehand. Those things are different. Those suggest that there's been a change in nature of the 4-year cycle. Does that mean that we're not going to see a repeat of the 4-year cycle? Well, if we are, I want you to be prepared. We're getting right into the very, very heart of when the 4-year cycle peaks. So you can't just say, because Jordan is seeing and noticing these changes and doing it very early, right? Jordan actually was someone who very early recognized that 4-year cycle behavior and then helped others understand it. So they were able to position accordingly and then manage their own risk around that. And now he's also early on noticing that, wait, maybe we could see a changing behavior. So I'm presenting it, and I'm also presenting where that's wrong. Like it's one thing to have an idea, and then it's another to understand where actually that didn't come to fruition. So we're gonna go, that's what we're looking strongly at today. So make sure everyone's aware. My own hypothesis of what happens next over the next 12 months is something more along the lines of this. This would be two major differences. Instead of having what would be an elevated blow off top into the peak, we would see actually price come in well under that past mean, and which is okay and good because that means that the sustainable channel continues. And then the next different thing that we would see, remember, we've already seen reduced downside volatility. We've already seen a new high prior to the halving. The next thing that is going to suggest that the 4-year cycle is different to me is instead of that mean reversion, we're going to be under the mean. That would be number 3. And number 3 also includes continuing past where past cycles peak right here, January 2026. So that's number 3. And then number 4 for me is going to be that we get higher into the summer of 2027 than we've been in past cycles. And that is going to be, and when you could look at it like this, imagine this current cycle goes something like this. This is number into the summer of 2027. If you're above this previous cycle, which has never happened before, that would be number 4 thing that is different. At that point in time, it's undeniable that the 4-year cycle is dead. But right now, today, it's not deniable. A lot of people are looking for right now this short window that's coming up where we're going to see price appreciate, or maybe not. Maybe we have drastically diminishing returns. But I know a lot of people who expect mega price action to the upside in these next few months. And that's not as important as whether or not it's the cycle high, whether or not from there we go, or I should say more accurately, why haven't you hit the thumbs up yet? Go ahead and do, if you're here watching live or on the replay, hit the thumbs up. We'll continue going. Now, more importantly is whether or not that we accelerate to the upside, but do we have a peak coming up and then from there enter into what would be a bear market? And I'm going to give you the exact level, price, and drawdown of where actually I'm wrong and we've entered into a bear market. Let's continue going over here. And so you have a date to watch out for is September. Some people saying, listen, in the past, this would have been brilliant. If you're buying 500 days before the halving, so in this area over here, and you're selling 500 days after, now over here, you probably had the potential. I would say if someone were able to exit 2017 somewhere above 11,000, that was really good. This price action was so violent to the downside and so quickly. And a few weeks earlier, people were just like almost in unbelief. I can't believe the price of Bitcoin is $19,000. It had come up so quickly. We would see, obviously, just a few months earlier, price was under 10,000. It was a massive price appreciation. So was this a fine exit? It was a good exit. It was not a brilliant exit, but it was a good exit. Same thing over here. If you're buying over here some point at the bottom, 500 days before, I don't have the exact numbers. These circles are pretty wide. Well, let's just say it's a brilliant entry. Let's say this is 6,000. So this to me looks somewhere like $4,000. It's a brilliant entry. And then you're selling over here in what is, 53,000, a fantastic sell as well. So far, this is absolutely brilliant, buying 500 days before and selling 500 days after. And most especially over here in 2023. I mean, fantastic. I mean, that looks as good as our 17,250. The bull market has begun call. and it looks super fantastic. And is it coming over here right now, wherever it is, 500 days? Is it up here at 170,000 or whatever that is, or is it 500 days from now? Is that the sell? Here's where it matters. Up until this point, if you're looking back, this has absolutely been phenomenal, phenomenal, phenomenal. Like like entertain me for one moment. And what happens if you sell here and let's say price is all the way up at $180,000 where they have that marked, and brilliant. You bought it at below 20,000, selling all the way up there, or even if price is not up there and it's at 100,000 wherever. But then what happens if actually there's been a change in the adoption and you are to see, right, something like this happen where Bitcoin makes that walk up and you're out of the market because you sold. That's the plan to sell over here 500 days after. And then what happens if you fast forward a little bit? What happens if we fast forward not to my next target, but then what I believe happens after here is that the fifth thing that will be like massively different as you move over into 2027 into the spring of 2007. The next green spot is going to be somewhere over here. I don't know. I don't even know where it is. And I said, listen, 12 months is very far. The macro can change rapidly. It's why each and every day we're here putting the work in to stay on the right side and to be able to, in a heartbeat, adjust to new information presented. Like that's the difference between CTM and other people who just have ideas about what happens next. We work very hard to stay on the right side, putting it all together. And it's nothing easy about that. But you look back for the 5 years we've been here, we have a tremendous, tremendous history of being able to do that turn after turn. And so I said 12 months is very far. But my next assumption is that somewhere into the spring of 2028, we're going to be well above this area over here. And the thing is let's say you're at 257,000 and or higher, and you coming into that 2028 halving, well above. Remember here I said we're going to be below these past means. We're going to be below. We're going to be above or in the very top tier coming into 2028. Let's say it's 350,000 Bitcoin. I have no idea what it'll be. We'll figure it out. At that point, this was the worst mistake you could have ever made because you are mega short Bitcoin because you never had a chance to get back in after selling your Bitcoin. Is the worst mistake you could ever make. So that is the worry. That's the concern. No, by the way, let's just really get a breath really quick and check in on what's going on. And we have right now alts extending their move against the dollar, the breakout of the flag. We were right on time ahead of the breakout, making sure everyone's aware in case it did happen. You could see that against Bitcoin. We are continuing to see alts run, and you're seeing probably and likely across Twitter, lots of calls right now for Altseason is happening. It's happening. And again, my expectation is that this puts in a decent move against Bitcoin dominance, taking us back down towards maybe 60, 61. And who knows? Maybe we go lower than that. I certainly don't know. And I mean, we have that's pretty this is kind of where I'm saying in this area of support, it's just where I believe the maximum of the move could go. Now that obviously that could be wrong. If we break through that support, then we have the opportunity to go much lower. And between 58 and 57 would be my next assumption of what would happen, and that would be a very big and strong move of alts against Bitcoin. And I think it's going to be sharp when alts are able to break out against Bitcoin, but I think it's going to be short lasting. The duration of this likely going to be, I'm just going to say a couple of weeks, but we'll find out. We certainly know that we are positioned well on this breakout over here as we have Bitcoin on the sidelines. we have Ethereum was the leader here and running up 31%. Cardano now building a position, 13% into profit. And yesterday, Solana just entered. So you could see with like just from following momentum, our alts are leading over here, and we are on the right side. Coming over and taking a look at, again, other people looking for that symmetry to continue. And I mean, I remember a year ago, it's over a year ago now, actually, or not too much over. It was July of 2024 when the calls for the banana zone began, and obviously, and that was due to, I guess, similar 4-year cycle behavior when it came to refinancing of sovereign global debt. And that hasn't worked out. Like, usually once people notice patterns, that's usually when you see a deviation from them. So are we going to see a deviation or more of the same? And again, the symmetry here is very close to that 500-day symmetry, and potentially very well. So over here we have the end of November, November 28th, I guess, every time. So in that window we talked about, and we gave a very long window. We said, well, anywhere from September through December. Like that definitely rhymes. And right now you have to look for what that breakdown would look for in case you're seeing a lot more of the same take place. So we're going to make sure you understand that, and we'll take a look at it. And I like this one. This is just, I don't know who this guy is, but he's presenting Ben from Into the Cryptoverse's work, and Ben's is just like the idea. For sure, Ben is not saying that this is going to happen. And for sure, Ben is saying, listen, maybe we'll have a repeat of what we've seen in the past. 4-year cycle similarity, mega diminishing returns, or maybe not. Like that's the difference between, I think, Ben and a lot of other analysts out there. And for sure, a lot of people misrepresent that. So I don't want to misrepresent that. But I like that in the past, you could say that, wow, this has worked out really well. When you look on the weekly chart and you look at a 200-week SMA, you see that every time the SMA has hit the previous cycle peak, that's where Bitcoin has peaked. And again, when the SMA 200 SMA hits the past cycle peak, that's when Bitcoin has peaked. Look at that. That actually points to actual November, as I believe, being the peak, and a lot of people believing April was the peak, and whatever. And then you continue that out, and we're getting very close to what would be the peak, the next peak occurring at this point in time. That's when around 70,000, 200 SMA reaching that area, right? 69,000 was the peak. That would be where we're coming into, and that's projected to happen right into the end of the year. So I think that one's neat to watch out for, and a lot of 4-year cycle similarities continue. One that's different, though, is the pi cycle. A lot of people believe that the pi cycle is the go-to indicator for the call of the top, and it might be. My own hesitation about the pi cycle is that we just looked at what the top was, and the top was in November of 2021, and you could see that, well, it matched up from this 200-week SMA work taking out the previous high. In this case, the pi cycle crossed over here into April. And again, price did make a new all-time high. It worked out where if you took this exit, I should say, that it wound up. But I mean, two things in this area here in November. If the Fed did not pivot and wind down quantitative easing, and let's say that like they kept it going for 3 more months, Bitcoin would have continued to rise. I strongly believe that I said in 2020, the biggest risk to Bitcoin's bull market will be the Fed and Fed policy, true to form, as they began winding down quantitative easing, pivoting to tightening. That's where Bitcoin topped. And the major indication of that's what, don't forget, M2 continued extending all the way through April. Bitcoin had been off over 40%. It's a very poor indicator at the top, but M1 turned that very month. Monetary base total started going down that month. That was the top. And then another thing that happened was obviously FTX was selling Bitcoin to customers that they didn't have. And that right there, likely, I believe, was suppressing price. And it worked out where this was a good or an okay exit for the Pi cycle, but I wouldn't say it was accurate. And what happens if that happens going forward? What happens right now? The Pi cycle is projected, right? Kind of into 2027 at almost 400,000, and that's going to change depending on what price does. Of course, we all know that. That's today what it's projecting. But what happens if Bitcoin peaks 4-year cycle behavior and it peaks over here? Let's say it peaks at 150,000 and then goes into a bear market. Well, then the Pi cycle is gonna be you're not gonna get out on an exit. It's gonna be very bad. So I don't like the Pi cycle, but I don't care. It's data, and we'll continue to monitor it to see whether or not it actually winds up being on time or useful. The mic's going crazy. Sorry about that. What about this? This is the sustainable channel that we continue to be riding within. The longer that happens, if we break out below, that likely signals that we're into trouble. And if we break out above, that likely signals that we're about to see more rapid price appreciation, which is then going to lead to a stronger reversion downwards to the mean. So both those, that's why I call it the sustainable channel. And then over here, we have what is the bull market breakout invalidation. We came close. I think we were saved here personally by the court's decision to allow Grayscale to move their fund into the spot ETFs. And then we saw the rapid inflows and Wall Street coming to the party, sending Bitcoin into a new all-time high. Prior to the halving, again, this is adoption that cost Bitcoin to make the new all-time high. It wasn't the 4-year cycle halving dynamics that caused it as every other time in the past. This was adoption-based. And we continue to watch ever since I called the bull market breakout at $17,250 in December 2022 for a breakdown. And it could happen at any point in time and going forward. And here's where I know if that were to break down, that's wrong. But I'm going to give you a much more exact number. I'll do that right now, actually. Let me just see what the next slide is. Perfect timing. That's exactly what I wanted to give to you right now. And I'm going to come over to this chart over here. And this is the structure of the market. So right here, this is the breakout that we just had. We've been watching as it was coiling underneath the resistance, and we've been talking about how that's bullish. And again, I didn't know it was going to break out. We just know how this is how I perceive the market. It happened to break out. We've had a breakout, a retest, and now we're trying to make the resumption up to continue. If we break down below this line, that's where this breakout becomes a false breakout and probably a liquidity grab, and is going to send price down probably significantly lower. Usually when you have a liquidity grab, the move to the other side is pretty strong. So I would imagine that there's a strong chance that we come down towards just below that 90,000 area if that were happening, at least. So that's why those two lines are there. Now you have this other structure of all these lines here. What are these lines, Jordan? What are you doing? So notice the top over here in March and April, the two touches into the symmetry. Notice October and November, the two touches into it. Notice the bottom over here, December and January. And throughout Bitcoin's history, this structure remains, specifically ever since the peak of the hype phase, right? And I mean, Bitcoin was barely trading. If I take these lines and go lower, it's still going to be the structure. for example, you see the support, you see the resistance and where you found support, but we don't need to be down there. I don't need to be down there at least. You know, it's still the structure. I don't know why it has structure. I just know this is what the structure is. That's why all those lines are there. Okay. Now the next thing I'm pointing out to you is this. You could say this line over here is pretty strong support at this point in time. We do not want to break below that. Or I could say if we don't break below that at any point, that is extremely bullish. From where we are, from the high into that line, by the way, that's only a 36% drawdown. We've seen multiple 30% drawdowns this cycle. That's also something that's significantly different in this bull market. We continue to look at what's different. And we talk about downside volatility a lot. So I wish I had that chart to show you. And since I don't, I'm going to pull it up because it's really just appropriate to have that right now. So let me go over here and to check on chain. And I'm going to go to find drawdowns. Is that the only drawdown matrix? There we go. So let me try over here first. And that's not the one I want to show you. I'm just not familiar with this. There we go. This is what I wanted to show you. And you could see that, you know, coming back to 2015 through 2017, it's very similar to this one, except that we had multiple drawdowns that were close to 40%. This is close to 40%, 38%. This is over 48%, 40%, I should say. And again, this one over here also. I'm sorry. These are just under 40%, these two. So we had 3 drawdowns that were 42%. I'm sorry, 38% in duration. And then we had multiple that were 35. 1, 2, 3 that were 35. In this case, the largest drawdown to date has been 30 almost below 33%, 32%. And obviously you're seeing reduced downside volatility, including this one here, where the NASDAQ drew down 30% and Bitcoin drew down 30% with it. That was, I think, the first time in history that Bitcoin had a ratio of 1-to-1 with the NASDAQ instead of exceeding it in drawdown. So that was absolutely substantial. And you're seeing the clear as day, the reduced downside volatility during this particular drawdown. And I'm trying to say right now that even if we draw down 36%, that's well within, right, what I would say is very strong support at this particular point in time. That wouldn't be the end of the bull market. The bull market invalidation is down here where we tested the low and then retested it over here. And that's pretty significant in distance in away. That's like a little above 50%, but I'll call it 50%. And as long as we hold that line, that particular line, that's the bull market invalidation line. And if that is breaking, that to me suggests that the drawdown going forward is going to be significantly greater and in duration and length. This for me would say that the bull market is over and that my theory is wrong. Now, here's the thing. If you break down from this line, right, and you have like what would be a normal correction over here, right? Let's say that you have like, let's say it's 65%. Like we had 84 in the past. You had 85% drawdown in the past. You had 76% last time. Let's say it's 65%. That's much less than last time. You know, I think that's being generous, but you can see that that's an additional 25% drawdown. And if you do have what would be a 75% drawdown matching last cycle, right? So I'm just going to find, you know, roughly into there. You're talking about an addition of almost another 50% drawdown. That's a bear market. That's completely, my theory is wrong. That's where I'm wrong. Now, that's fine, but that's almost from an academic stance in so much as that, listen, Jordan, like that's a long time. That's a big drawdown to be like a 50% drawdown. I'm not looking for that. And for whatever reason, the way I choose to maneuver within the market, I want to be out much earlier. If the 4-year cycle is getting ready to peak, how do I exit at the top and what does that look like? And the thing is that you cannot have any 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 idea of if the peak is between the end of the year and today, as 4-year cycle theory suggests it is. That's the window. That's being generous on the window, making it the longest 4-year cycle in history to date, which is fine. The last one was longer than the previous anyway, so who cares? But that's the window for the 4-year cycle to peak in every which way, and we don't know whether or not if it does peak, that price is where it is today, if it's significantly higher or lower. You just don't know, right? But if that's the window and beyond 2026, what's your exit plan? So if you follow 4-year cycle, does that mean that I'm just going to exit regardless of where price is by the end of the year? Or could you use something like, I'm going to tidy that up. I don't like that. So I like this one better. The reason I'm looking for where we had the touches over here, almost into it, and you can see it's just a trend line. It's not as accurate as our structure. And then I know it wicked below here, but those were really extraordinary circumstances with the obviously really major unknown about what was taking place with all of the new trade deals the United States was focusing in on. I would say that this is a pretty safe line that if I'm looking for an exit and price trades below it, that's like probably where I'm going to want to be able to manage risk around. And the only thing I can add about that, and it's probably the most important, is this: is where did anyone hear 500,000? So I haven't heard that number said once. So LOL. So anyway, so more importantly, this is what, like, if you were to use a particular reference, whether it was time, like by the end of the year, or whether it was a breakdown of a trend line like this, the important thing is if you do exit for any particular reason, you have to know when you're wrong also, which means that you have to then say, at what point do I get back into the market? And let's say it's this line over here, and let's say this line breaks in November. And let's say that's like right here at 112, below the breakout, right? And breaks this trend line and it's below 112. And let's say price had even came as high as 137 in the meantime, or 143. That might be, you have to have a line in the sand where you say, all right, if price trades above that and makes a new all-time high after that, I'm wrong. And I need to go ahead and also have an area of reference where that I get back in, because at this point it's clear that the 4-year cycle nature is broken to you. And maybe that line is, if that happens after 2026. So whatever the high was prior in 2025, and then you say, okay, well, 4-year cycle theory suggests that price would never make all-time high after that. So if it does, you're wrong. And that's, I'm not there. As the market unfolds over these next few months, I could have a very accurate idea of what that would be for me if I were exiting. But again, my whole my invalidation is much lower than yours. My invalidation would be the structural line that we looked at together, and that structural line is going to coincide very well with over here. And I could say that we looked at this yesterday or the day before together is very important. If you haven't seen these videos, you should be watching them every day. So here we go, and we're looking at the solid line over here, which yes, price has pierced below twice recently during the global lockdowns, during the FTX blow up. And I don't think that outside of an event like that, and events like that could happen, right? That we're going to be trading below that line. And where that is right now is, look at that. So in August at 63,000, we're in July, it's at 60,000. What was the number that I gave you right here? There you go. Into August, 60,000. I mean, this is the structure is what I consider to be the most accurate. The other, I mean, these two tools that I use to gauge projection and risk line up right on time. And that's why I think if that were breaking down, something's wrong. I don't think that happens, obviously. And you could see clearly why. I mean, are we dependent on equity markets? And if you ask me, hey, listen, Jordan, we begin to see a deterioration of the macro that begins occurring, within the window specifically that we've seen on average, like, through 40 days from when we began tracking this, right? Current episode. And then you saw the average event driven recession you saw on average 40 days later is breaking down. So say we got to have a little wiggle room. And we know that through the end of the year, we see like seasonalities, like this September is normally bumpy, the first 3 weeks of September. So I'm saying, well, okay, instead of just the 40 days, which would be like sometime into the end of July, let's give that all the way through the end of September. And if you see equities pull back slightly over here as per seasonalities, no big deal. If the NASDAQ from this point on, though, doesn't able to regain those seasonalities to the upside, and you could see that right over here after the 20% drawdown, we're tracking the outermost deviation, which happens to be the 1998 cycle. But at this point in 1998, prior the last 2 years, the S&P, just like the last 2 years now, had a gain of over 20% back to back. It's only happened 3 other times. That's tremendous. There's a lot of similarities there. And if we're able by the end of September to regain those seasonalities, then it strongly suggests we are coming into a strong end of the year. Now, if that didn't happen and you see something like this 1968 period, and by the end of the summer, as we enter the September, we come off per seasonalities, which is just normal, but then we come off into the end of the year and the NASDAQ comes down, 25%. Is Bitcoin correcting 25% with it? Probably unlikely, except that, you know what, there are many things to think about, including, well, we are seeing the adoption rate accelerate here. And if that's continuing, that could help put in a ratio of 1 to 1, or like, I will be so excited the day that the NASDAQ corrects 25% and Bitcoin only corrects 20 or 15, because that's the next milestone for Bitcoin. And yeah, that could happen. Do I think that we're going to see the NASDAQ correct 25% and Bitcoin rising in price? I don't think we're going to see that anytime soon. But I don't think anything here suggests right now. Now we're about to enter earnings seasons. Let's find out what's going on, right? We need to be able to take in and interpret the data as it's presented to the market. But nothing today suggests that the U.S. or the U.S. stock market is nothing but healthy. And there we are for today. So, listen, I really wanted to get into. It was very important to me to get into this question over here about what I perceive to be the best opportunity over the next 6 to 12 months, and that is going long the 2-year as the coming Fed chair is expected and likely to participate. And even the current Powell has said, listen, if it weren't for the unknown of the tariffs, I would have already lowered rates. It is perceived that likely the highest probability is that over the next 6 to 12 months, we begin to seeing the to see rates begin to be cut. And it matters, really matters, whether or not they are cutting into a recession or normalization, because 12 months from there, the S&P is either up on average 13% if they're cutting into normalization, or down 11, 12% almost if they're cutting into a recession. So all of that matters a lot, which is why we're so focused on what happens next with the macro, with the hard data softening, especially. We're not seeing that happening yet. It could happen though. And if it happens, Bitcoin is not immune to a recession. In yesterday's description, I put that video about the global risk recession and how Bitcoin would act in a recession. And it's not good at all, but that doesn't seem to be the direction that we're headed in today. And I want to go ahead and I want to take up on the questions on the 2-year, but we're going to do that tomorrow. Today session was highly focused on 4-year cycle behavior as we're getting close to the zone of where it's expected to peak. And we looked very specifically about what it means if that happens, how to manage risk around that, where you're wrong on that. And I think it was just a fantastic, fantastic session. Everyone, have a beautiful day. Tomorrow we could do that for sure. We got it locked and loaded over here. And obviously it's expected that Bitcoin will continue making new highs against gold. But tomorrow, remind me, we'll do it. For now, have a beautiful day, everyone. God bless you. Thanks for being here, everyone. And big shout out to the silent majority. Big shout out to all of CTM. We are here, holding some beautiful positions and loving it. Everyone, I'll talk to you tomorrow.